Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 top analyst stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that come in with a strong buy consensus and have some recent buy ratings from top ranked analysts. We found these stocks using the top analyst stocks page. Found under the Ideas tab over on TipRanks, this page will show you stocks with a strong buy or strong sell rating consensus according to the best performing analysts. So of course, we're looking for a strong buy and sorted through our list here. So today we're going to take a look at these 3 companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Just before we get into that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into our 3 top analyst strong buy stocks. First on the list, we're taking a look at Fluence Energy. They trade under the ticker FLNC, currently priced at $18.50 per share. Overall, in the past year, they've gained nearly 12%. In the last 6 months, they have fallen slightly, but are climbing back a bit in the last few. Fluence is enabling the global clean energy transition with market-leading energy storage products and services. Their energy storage products are both scalable and economical, capable of operating at multiple levels and featuring a modular construction that allows for ready customization or expansion. Customers can choose a wide range of installations from large grid-scale systems to smaller modular units. They even have energy storage systems that are specifically designed to operate in conjunction with photovoltaic panels, a necessity in supporting solar power generation. Fluence will be reporting their Q2 next week on May 8th, and this follows their Q1, where they did come out with some record order intake and a much narrower than expected loss. For their Q2, analysts are anticipating a loss per share of 7 cents, which would be half of last year's. This follows their fourth quarter, where they came in with a loss per share of 9 cents, which was 6 cents better than estimates, and had quarterly revenue of $364 million, which increased 17% year over year. They also had record $1.1 billion in quarterly order intake, which resulted in their highest ever backlog. Just a few weeks ago, a 4-star analyst from Raymond James upgraded their rating on the Fluence Energy stock to a buy. They said, "We are turning positive on Fluence for the first time in their 3-year history as a public company. It is hardly a revelation to point out that power storage for the grid represents a play on both climate megatrends, mitigation and adaptation. With that in mind, U.S. storage installations more than doubled in 2023, with similarly robust growth around the world, and this is set to continue." The stock currently has 13 analyst ratings and nearly comes in with all buys with just 1 hold. And the average price target is $27.14 for an upside potential of over 46%. Looking at our detailed list of ratings, we do have 1 5-star analyst recently weighing in with an upside of 76%. On the low end, we do have a buy rating with a downside of 20% from back in March, and our high-end price target comes from Canaccord Genuity with an upside of 98%. Our second top analyst stock today is Tempur Sealy. Their stock trades under the ticker TPX, currently priced just shy of $50 per share. The stock has climbed 38% over the past year, but has cooled off slightly in the last 3 months, down 1.25%. Tempur Sealy is a leading designer, manufacturer, and retailer of mattresses and bedding products worldwide. In fact, they are the world's largest bedding provider, and the company holds some of the most highly recognized brands in the industry with Tempur, Tempur-Pedic, Cocoon by Sealy, Sealy, and Stearns & Foster. Their products allow for complementary merchandising strategies and are sold through third-party retailers, their 700-plus company-owned stores worldwide, and their e-commerce channels. Tempur Sealy will be sharing their Q1 earnings report next week on May 7th, but investors and analysts are also keeping a close eye on their pending acquisition of Mattress Firm. In their last update about the acquisition, they said that they expect the FTC to complete the review by the end of the second quarter, and that they expect the transaction to close in mid to late 2024. With their Q1 earnings report on May 7th, they're also expected to provide updates on the acquisition. For that Q1, analysts are anticipating earnings per share of 49 cents. That follows their Q4, where they came out with earnings of 53 cents, which fell 1 cent short of expectations. For that quarter, revenue came in at $1.2 billion, which was consistent year over year. 1 5-star analyst from Bank of America recently weighed in on the stock. Their buy rating had to do with the anticipated rebound in mattress industry demand and the strategic acquisition of Mattress Firm. They believe that the current downturn in mattress spending suggests there is pent-up demand, which positions the industry for potential significant growth. And the acquisition of Mattress Firm is expected to meaningfully contribute to their earnings per share, with the transaction potentially closing in the second half of this year. While the stock does just have 6 current analyst ratings, they do come in with unanimous buys. The average price target comes in at $65.33 for an upside potential of 31%, and we have a pretty close group of price targets here. On the low end, we do have a 20% upside from KeyBank, and our high-end price target is at 50% upside. If you've made it to our third stock, this is your reminder to make sure you hit that thumbs up button. Third on the list today is MGM Resorts. They trade under the ticker MGM, currently priced at $40.90. They are down 6.5% overall in the past year, though they are up 7% in the last 6 months. They've fallen 8% in the last 3. MGM Resorts is a casino company well known for their properties along the Las Vegas Strip. They are the owner-operator of 31 hotel and gaming resorts around the world. While some are in Nevada, they also span Massachusetts, Michigan, and New Jersey, and they also have an important presence in Japan and China. While the company has operations on mainland China, including 2 properties in the popular Chinese gambling area of Macau. MGM Resorts just shared their Q1 earnings report yesterday on May 1st, and they did come out with a comfortable earnings beat. They reported Q1 earnings per share of 74 cents, coming in well ahead of the 56 cents anticipated. For the quarter, their MGM China achieved record quarterly results with adjusted property EBITDA up 78% year over year, and their Las Vegas strength continued in the first quarter with record Q1 net revenues. Those net revenues came in at $2.3 billion. Following yesterday's earnings report, we've had a handful of Wall Street analysts all weighing in. One of them is a 5-star analyst from Susquehanna who upgraded their rating on the stock to a buy. They said what stood out for the firm and led to their upgrade was the management call, where there seemed to be a much better focus on the outlook. Management conveyed both an expectation to invest more capital in its highest returning asset in Las Vegas and additional tools it has to both optimize yields through a softer Q2 environment before accelerating growth from investments. The MGM stock comes in as a strong buy based on 14 current analyst ratings, with 12 buys and 2 holds. The average price target of $57 would imply an upside potential of over 39%, and looking at all of our recent ratings, all of them pretty much have come in following that earnings report. On the low end, we do have a hold rating with an upside of 12.5% and a couple high-end price targets here with upsides of 66%. So that is a quick look at 3 strong buy stocks that have picked up buy ratings from some top-ranked analysts lately. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you stick to your own investment plan. Thanks so much for watching. Have a great day, and I'll see you back here next time.